So let's come to the topic of the day: personal loan trap, risks of informal borrowing. Uh, this is a sort of content which is nothing new for you, for anybody actually. But sometimes, hearing another opinion or a person's view can sometimes change your mindset towards that, perhaps for the better. I can share you with what is my thought process on this. Once we are going through these slides, I'll do that, and you can decide whether your view is very diametrically opposite mine or not. Uh, do like and share this video. Do subscribe to the channel. Once again, there's a request for that. So the lure of personal loans is huge. I mean, we are bombarded with phone calls, emails, WhatsApp messages, our bank RMs calling us. There is just so much of credit available, provided, of course, you are credit worthy. And in today's world, whether we are talking about India or rest of the world, there is a quick access to funds that are available, and for needs which are becoming like, like medical emergencies, weddings, travel, debt consolidation, and so on and so forth. So whenever you want to take a borrowing, it is almost readily available, unless your credit rating is really broke. It's a different matter at what interest rate, in what conditions will you get that loan for that matter. The EMI trap is certainly a thing that the economists are worried about. So high interest rates and rigid repayment schedules leads to EMIs consuming large portion of monthly income. So 26.5% according to Investopedia is the average rate of personal loans as of June 2025. And we are seeing that significant portion of the take home disposable income also goes towards either a home EMI or a car EMI, and so on and so forth. And the percentage of that continues to grow. A person is finding it very difficult to contain it to a reasonable figure. And in general, also over the last since 2008, credit growth was not rising, but post COVID, credit growth started to rise dramatically. In the very recent past, it has come off, but still it is at an elevated level. And total credit to unsecured personal loans as sort of going exponential now. You can see the steepness of the curve is going faster and faster. This perhaps is also increasing because in COVID times, a lot of folks perhaps lost their jobs, uh, shut down their businesses. It did not come back as much as you would have wanted. In fact, it got consolidated, and larger companies with more technology at their disposal were able to pick up that market share, and leaving the weaker business folks or entrepreneurs a bit lacking in terms of their uh, revenues. So data compiled by this regulatory group face is showcasing that small ticket fintech personal loans are getting more and more overdue, and that is increasing. That percentage is increasing, is the highest in 6 quarters. And there is stress, notably in tier 3 and rural areas, amongst young borrowers under 25. Now, whether they are borrowing it to play poker or whether they are borrowing to sustain some living expenses is difficult to say. But borrowing is easily available. That is the main question. So when you sort of exhaust, and I'm talking about mostly for youngsters, when you exhaust your normal borrowing options, where you may not even have a credit history to get a formal borrowing, you want to borrow from friends, and that seems like a solution. And the advantages, perceived advantages, often are that my friends and family or relatives, I can ask some money and they will probably not ask any interest from me. There will be flexible repayment terms as per my liking. No documentation or credit check, of course, is required, and there's quick access to funds. Bhaiya, please de do. So the illusion of ease, while it looks very convenient, I mean, there is a lot of complex risks that are involved in this particular uh, strategy as well. Either you are so, willfully a defaulter kind of a person inside, where that I'm taking my friend or a relative for a ride. If that is not the case, then I think these measures should be taken very, very carefully. The hidden dangers of this is of informal borrowing is that you will strain your relationship. So repayment delays, I mean, if you're not able to repay, if you're not able to pay in time or interests, or the expectations of the person who has given you some money may be different from what you are thinking. Maybe he was expecting that out of politeness you will offer him interest, or they may, a couple of months later, they may also need the money, and it can become awkward. There can be some resentment and even breakdown of friendships or relationships. So my personal view on this always has been, in the last 30 years that I've been in at work or in business, is to never have any business relationship with any friend or family. Neither ask them for any money, neither ask them for any business, no solicitation of business, no recommendation of anything of any kind, that you should buy this or you should not buy this, nothing. So that creates a very healthy relationship where the other person has no expectations of you know uh, you sort of giving them any advice or not, and you are also keeping that your business and friendship slash relationship in a separate silo. As soon as these two mixes and something goes wrong, which often in a business can happen, you run the risk of ruining your relationship or friendship, which in my view is not worth it. I mean, you make only few friends, there are few relatives, and there is no point of breaking down those relationships because of this change of money. But yes, of course, if there is dire need and you wish to help yourself, then there is a sort of a thing that can be done. Now, lack of legal procedure, this also, perhaps the informal loans lack legal contracts, making it difficult to enforce repayments or resolve disputes. And this is not just friends and family only, or relatives. It can also, be some sort of, somebody in your neighborhood or somebody just about known to you, but who is wanting to have a significant return on the money. They can also take those kind of risks. But there are no contracts. It's all sort of I trust you kind of a situation. So reputational damage is something else that will come along. So once you have defaulted on somebody, that news is going to travel like wildfire in your circles, and while you may not be able to borrow from others now, your reputation forever is tarnished, because that will always remain in the minds of the people, that this guy had defaulted on this guy. So you have to keep your reputation also secure, ensuring that this one mistake should not become a lifelong issue in terms of your reputational uh, uh, standing. Then of course it can become a cycle of dependency. It happened with one of our friends. um, he borrowed some money from one friend, but he did not sort of he was not disciplined to make sure that his finances came back. And 3 months later he borrowed from another friend, and 3 months later from another friend, and by a couple of years he had borrowed from the entire batch of whoever number of friends that were there. And this cycle of borrowing basically became like a cycle of dependency. That person was not able to fix his finances at all, and was just hoping that each borrowing will help him come back. But then because the borrowing was so easily available, that he got into a cycle of dependency on that money, that this money can keep coming in. Your friends from whom you borrow may have their own financial needs also. So today they may have some surplus, tomorrow they may have some need, they may have some medical need, some child's need, and by sort of lending to you and not getting that money back, it can put them in a difficult situation, which you also may not want to happen, but that would cause a lot of strain as well. So breaking the cycle, basically you need to identify areas to cut costs. So as you already know, I mean, whatever income you are able to generate, you need to make sure your expenses and your borrowings as of today are satisfied within that. Whatever belt tightening is required, you need to do. You can't rely on others to keep giving you that delta that is there in your balance sheet. or income statement at least. And discuss options like EMI restructuring or partial payments. I remember with that friend that I'm talking about, few friends got together and did try to restructure, give him some advice about how he can restructure. For instance, he was living in a house which was worth maybe a crore and a half. So the loans had gone up to like 40-50 lakhs. So people gave him a suggestion that why don't you know uh, resize your house. Instead of a three-bedroom house in a particular location, maybe you could go to a two-bedroom house in the same location, or a three-bedroom house slightly further away, and get 50 lakh rupees of liquidity and get out of this loop of interest payments and debt cycle. But because it's difficult to take those decisions, that person was not able to take that decision. So boost income to make financial obligation by side hustles and freelance. So again, your main income may be not very variable, but then if you will look around, if you will work hard, if you're willing to really get out of this rut, you will work some part-time job, some freelancing, some side hustle, some weekend jobs. Just even if it makes you 5%, 10% extra per month to get out of this cycle. And of course, you always need expert guidance on debt management and financial planning. A lot of folks are stuck in credit card debts. They charge you like 36% per annum on your overdues, and that is a cycle which is very difficult to get out once you start to max out half a dozen credit cards. That's something that probably is very difficult unless you have a good advisor or a friend who can help you consolidate. So there are enough number of things that can be done. You could communicate with your lender and renegotiate. You could consolidate debt. You could review your budgets. You could try to increase your income. Have a financial advisor look at it. But mostly, what people don't do is to maintain good habits. So the habit formation of living within your means and having a plan to run down your excess loans is usually not there, and that is where the struggle starts to happen. So I mean, this is more, I suppose, to do with very young folks, but I am hearing a lot of people in middle income, middle age uh, level also struggling with a lot of EMI. So people buying, houses or cars way beyond what they can afford, and that is the sort of starting point of a lot of trouble. So don't borrow from friends just because your loan payments are high. So this borrowing from friends, I think, is a bad idea, or from family. uh, it just creates a lot of other issues. If it is a very short term short gap arrangement that you can see and you have a vision that I'm going to get this money from here in 2 months and I need to fill this gap, and you're reasonably sure about it, then perhaps yes. But if you are not sure how you're going to fix it and you're just borrowing, I think that's a very bad idea. It of course harms your relationships, as I said, does not solve your money problems. In fact, you will have a money problem and you'll have a friendship problem, an emotional problem. All that is going to just compound like crazily. So you can talk to your lenders, create a budget, look into some official financial help, restructuring of debt. All those kind of options are available. And as I mentioned, you really have to tighten your belt, protect your peace of mind and your friendships. Tell us in the comments, are you stressing out over your loans and how you are tackling it? There's a nice video that we did recently, 5 habits for wealth creation. Perhaps you should watch that as well. And of course, do like and share this video and do subscribe to the channel. All the best. Bye.